Well, I think with the growth, and really 3% is the top of our range, but we're looking at 2.8 to 3.3%, so that's really there. What we're seeing the growth doing is really putting a bottom on markets right now. So you kind of have this yin-yang of very good economic news, but you have the trade tensions and the tensions with NATO going on that have really caused a discount on the market. I'd like to point, though, about the telecoms deals that you were just talking about. And so even though the market as a whole may not have a double-digit gain this year, maybe more like high single digits, there are individual opportunities out there that are absolutely fantastic that sometimes, because of this funk, because of the political noise out there, we're not always as open to take opportunities from.
You wanted to key off that pretty quickly, Phil. So, I mean, do you like telecom stocks here? I mean, you got an AT&T. I mean, as Joe had mentioned, AT&T can now be categorized, as more, maybe not more, but as a media company in that bucket. It's got a 6 multiple right now, which is far from a media multiple, far from a tech company multiple as well.
Yeah, for us, it's really more the tech companies. So you have the game changers on one side, but then you have the objects, the people who are going to be purchased by some of these larger companies like AT&T, who actually have lots of cash still. Mm-hmm. And, even though we have had, interest rates go up a bit this year,
right.
Money is still cheap. Yep. And so the debt is going to get issued by these large issuers who have very strong cash flow.
So, Todd, you say the market is technically strong, and Phil was just talking about the bottom in the market being strong GDP, strong economic growth. We're seeing on the S&P 500 higher lows, but the highs are still firmly at 2,800, basically. What do you see as a potential breakout catalyst? What do we need to see from the markets here?
Well, one thing I've been keen on, Melissa, a lot, ever since this tightening cycle began in December 2015, is what I've noticed is even when it is expected that the Fed raises rates, when they actually do raise rates, the market has really struggled in at least the 4 weeks following that rate hike. And we just had that mid-June rate hike, and here we go again. The market's doing what it's always done during the tightening cycle. It's been flat. But overall, you look back to December 2015, it has digested these rate hikes. Now, as far as a catalyst, and by the way, it's around 27.85 is where the market was when the Fed last raised rates. Now we're going to another Fed meeting upcoming in the next 2 or 3 weeks. And that could be the catalyst if they stay on hold. Mm-hmm. Now, I know the market has also been entertaining a lot of different things, the trade tensions, whatever you have, it digested that quite well too. But I think it's just going to, it's really, the power's in the Fed. And I think every time the Fed holds, that gives the investors a little more confidence. And that could be the impetus for a breakout. Right. But other than that, or just some of this uncertainty being resolved.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.